Phil, around the middle of last year, the Mortgage and Finance Association of Australia launched a consumer-targeted campaign, The Essentials of Borrowing. What was the purpose of the campaign and how successful has it been?
Well, the purpose really was to ensure consumers knew what they were doing when they were going into a borrowing, into a mortgage or a business loan. And because our industry and our association is very much focused on facing the consumer and being consumer-centric, we felt consumers needed that advice. As to how successful it's been, well, our brand is better known out there than it was last year, but it's a long-term process. We'll be doing this every year for as long as we're around.
You have a code of practice for self-regulation and helped draft national legislation to reform the finance broking industry. Is legislation necessary to head off the kind of home mortgage lending practices that led to the US subprime credit crunch?
I'm not sure that it is necessary in Australia because those practices that we saw in US really don't exist in Australia, or if they do, they're very minor. There may be some minor tinkering with the legislation at the margin, but the legislation we've been supporting for brokers and so forth is a different type of legislation. It's really focusing on protecting the consumer from broker misconduct.
What is the main purpose of the legislation then, and now we have a new government, when is it likely to be implemented?
Well, the purpose of the legislation really is consumer protection. We've really focused on consumer protection as being a mechanism for, I guess, encouraging consumers to deal with brokers and third-party intermediaries. And by having regulation there, that gives consumers confidence that the person they're dealing with is licensed and knows what they're talking about. How soon? I still think probably not till mid to late 2009. There is still an issue as to whether the federal government will take over the legislation or whether it will be left with the states.
How much reassessment and repricing of risk will there be in Australia with the credit crisis and ensuing share market correction worldwide?
Well, there's been some repricing already, as we've seen with lenders looking at their books and changing their pricing. How much will change in the future, I guess, remains to be seen, but I'd expect we'll see more rather than less.
Just moving to a different but related topic, according to the latest Mortgage and Finance Association of Australia Bank West Home Finance Index, almost a quarter of property owners in New South Wales are unsure whether the value of their property has fallen in the last 12 months, with an additional 13% convinced the value has decreased. Are you surprised by these findings?
Probably not, because the New South Wales market, and particularly the Sydney market, has been the one that moved first and got into sort of boom proportions a couple of years ago, and it's clearly flattened out over the last year or so. I think it shows there's a fair amount of uncertainty in the market from consumers. Some are feeling depressed that their property prices have fallen, others aren't really sure, which indicates that they probably think that they haven't moved.
So if there's uncertainty, what are the implications?
Well, I think the implications of uncertainty are always volatility and things just happen in the market based around sudden shocks, whether it's consumers being suddenly more confident, whether it being some external things such as interest rates or the subprime issue in the US affecting us.
Phil, you'll be presenting on third-party distribution in the Australian market at the Credit Risk Management 2008 conference in Sydney. What are the key points you'll be touching on?
Well, a key thrust of my presentation will be that the third-party distribution sector in Australia is strong and robust and largely ethical and honest, and lenders really can rely on the third-party distribution chain in satisfying their credit appetite and ensuring that there is prudential risk protection.
Phil Naylor, thanks for joining us.
Thank you.
For more information about the annual Credit Risk Management 2008 conference, visit www.iir.com.au/credit risk.